Okay, everyone, welcome back to the Price Action Labs YouTube channel. So in this video, I'm going to be going over an ES short trade that I took on the 1 minute chart. So we're just going to start off by looking at the time frames from a 15-minute chart perspective, right? So I often get questions about what market do I trade, what session do I trade. So this is basically the 15-minute time frame on ES. So just taking a quick broad outlook as to what's going on here, what we can see very specifically is we have our most recent high, or our dealing range high, and our dealing range low. So these structural points here, I've had them for about basically the entire February, or most of February. So all of what we see here is inside of the dealing range high and dealing range low. So it's important to know where your dealing range is. Now, from the dealing range, we can begin to then dissect where our key levels are. And so this is a very common question I get. How do I find my key levels? And so today was an interesting sort of day where we broke a few rules. And so what I mean by that specifically. So if I just take a look at some of the indicators that I use, yes, I use the fib, even though this is not really an indicator, right? So this is the 50% area. So anything below that would be by definition a discount. However, I shorted from absorption area 3 down to absorption area 2. So I was shorting in a discount. So that is technically breaking the rules. And I'm also shorting below the weekly opening price. So for those who understand how I trade, I look for longs in the discount, and I look for longs below this weekly opening price. So what made me go for shorts, right? So the simple answer is order flow, right? So when price taps into my level, right, in order for me to go short like I did today at 68.70, I was looking at this data over here on the footprint charts, and once again, this data here on the footprint charts. But before we go to the footprint charts, let's try to understand the overall market story. And so by doing that, I use 3 simple steps. So the 3 simple steps I use, just so people can understand, and I want everyone to kind of follow along with this, is the first thing I do is I look for the 15-minute opening range, right? So 15-minute opening range. So what do I mean by the 15-minute opening range? So this is the first 15 minutes of the market open. This is between 9:30 and 9:45 Eastern, right? 9:30 to 9:45 Eastern. Right, so when we go to the 1 minute chart, let's break down what was going on. This is the first 15 minutes over here. So this is the 15-minute opening range. So I see a lot of traders mistakenly, what they'll do is they'll try and trade sort of the breakout, right? Or they'll try and trade a breakout, right? This is not how you want to be trading, right? This here, waiting for a breakout here, is typically not how you want to be trading. You use the 15-minute opening range as a confluence. So this is your opening range high, this is your opening range low. And so what you're looking for now is a tag into a key level. This is the most important thing. So if you're trading without key levels, you're basically gambling, right? Trading with key levels actually tells you where you want to be entering, where roughly you want to put your stops, and where roughly you want to be targeting, right? The key levels tell you that, right? Not the 15-minute range break. This is just an indication, right? This is just a confluence. But once you have your 15-minute range break, the next thing you're looking for is you want to see price tag into a key level. Now, when price tags into a key level, what is it you're waiting for specifically? So the first 15 minutes over here, this is from, again, 9:30 to 9:45 Eastern. So here is the range high, and here is the range low down here, right? Here's the range high and here's the range low. So everything you're looking for now, right, has to come from a key level. So we want to be basically longing here or shorting from here, right? So price tags into a key level. So I often get questions about how I find my key level, what criteria I use to find my key levels, right? So this is something I want to break down to everyone so they understand. So the way you find key levels is not by using volume, and it's certainly not by using fair value gaps, right? So I don't care that there's a fair value gap in the London session, right? I don't care about this, right? Because before the market even opened, I have my pre-market game plan. So I'm not interested in this zone over here. In fact, if I go to the Discord and I show you my pre-market plan, right? So this was posted at 9:49 Eastern, or this pre-market plan was around 9:30 Eastern. So what I'm looking for is I have my key levels defined, right? So I've got key level 3, key level 4, key level 5, key level 2. So basically, whichever level price comes into, I'm only looking for a trade at those levels, right? This is the main thing I want everyone to understand. I'm only looking to trade at 5, 4, 3, 2, or 1. Now, if we look at our trade over here, what was really going on is we tapped into key level 3. Now, when we come into key level 3, we can either have bullishness or bearishness. So the question is, how do you find that key level? And more importantly, how do you know whether to go long or short, right? Because that is the name of the game. So let's answer people's first questions. So for those who follow along in any of my socials, you'll know that I took a trade on Friday, and on Monday we tapped into this level, right? So this is a key level. On Friday we held bullish, so we held as demand, and then here on Monday we held as supply, right? That's the first thing to understand. Now, what's also interesting to understand is on Thursday we chopped, but on Wednesday we also held as demand, right? There was a nice opening range on Wednesday. So we held as demand over here as well. And what's interesting is if we keep going back to this same level, we will see multiple rejections of this point. So this is not your typical support and resistance. This was a long trade, right, from Friday, the 5th of February. So what you're beginning to see now, same thing over here, short over here. So what you're seeing here is this is a level because buyers and sellers were responsive. So as a little homework, if you're into footprint charts and you want to go back and study the footprint charts at this area, so this is ES 68.83 to 72.73, you will notice how price reacts to these levels, right? You need to have the dedication to go back and understand price. Now, where did this level come from? So this level came from the 20th of January. Price left a 15-minute fair value gap. Now, your levels are something that will develop with time. It's not something you'll pick up overnight, and you certainly won't pick it up by watching this video. But going over certain fair value gaps, spotting the rejection, and understanding how the market behaves at these areas is roughly how I find my key levels, and it's roughly the way to go. So if we go to now more recent price action, let's kind of break down again what we're seeing over here. If we just break this down, clear up the charts. So what we're seeing here is a 15-minute range breakout into our key level. So now that we tap into our key level, right, there's only two things that can happen. We can either long or we can short, right? This is what we're looking for. Do we want to go long or do we want to go short, right? This is the only thing you need to see. And this is where, truthfully, the footprint charts come in, right? Because we had quite a range at this zone, right? We barely broke above this zone. We started to have a couple breaks down here. So this is what we're now looking for. So when we see price breaking below our zone, or we start to see that weakness, right? This is where we want to understand price action. So again, being patient and waiting for the move is your biggest kind of advantage when it comes to key levels. So a couple of things about key levels here. Let's break this down. So we tap into this zone at 10 past 4 Eastern, right? 10 past 4, and we didn't break below the zone until 32 past, right? Or let's just say 31 past. We stayed in this zone for almost, let's call that 25 minutes. So in this 25 minutes, it's very easy for the markets for you to go higher, for you to start going short. I used to get chopped up in this region. So I have a few basic rules that I break down, and I'm going to break them down in this video, right? Now, the first thing is you want to be using footprint charts at this area. So I've got my footprint charts up here, and I'm just going to break these down. So these are what my footprint charts look like. So when we look into, basic price action, so I'm going to focus on this wick over here, right? This price action, as we start to melt to the downside, right? This is the main candle I want you to focus on. And so this candle corresponds to this candle, right? So what do you see over here that specifically tells you that you want to be going short, right? What does this candle tell you? So this candle gives you a bunch of information, right? This candle tells you basically one thing, right? So if you just take a look at the bid and you compare it to the ask, right? So the bid and the ask give you the information inside of the candles, right? This is what this chart shows you. This is the footprint charts. So this entire strategy is dependent on two things. You have the right level and you know how to read price action correctly inside of that level, right? These are the only two things that you need. So if we just take a look at this candle over here, what do you see specifically? So inside of this green candle, now the shape of the candle, the type of the candle doesn't really matter. You want to focus on the substance inside the candle, specifically this top half, because this is where we have all the substance. So what we see here is a left number and a right number. So what does this left number and right number tell us? So it tells us the bid and the ask respectively, right? So this is the bid on the left hand side, this is the ask. Now, when we zoom into the actual candle, what it shows us is blue delta. Now, what does this blue delta represent? This blue delta represents the fact that there are more aggressive buy orders than sell orders. Now, specifically what this means is that the ask is a lot greater than the bid. And so this translates to there being more aggressive buyers than aggressive sellers, right? There are more aggressive buyers, mind my spelling, there are more aggressive buyers than aggressive sellers, right? That's all that's happening over here. The ask is big over here, right? The ask is greater than the bid, right? We see that through blue delta. So the power of the footprint charts is that you can see without reading all the numbers who is more aggressive and hence who is passive. And who is passive is telling us whether we want to be going long or short. So think about it this way. If we break below the zone, which is basically what we had over here. So we break below the zone here. So you want to ask yourself, if we see this sort of price action here, right? So if we break below the zone, were all these buyers over here successful, right? All these buyers on the footprint charts, were they successful? Well, the answer is no, they weren't, right? All these buy orders here were trapped. And so this is what I want every trader to understand, right? It's not that there are more sellers than buyers or more buyers than sellers. Here, there's actually more market buy orders. So the market, let me spell this right. So the market buy orders, right, which is what you see on the footprint charts, are greater than the market sell orders. So in other words, who is sitting here at this key level? So this is now 68.84 to 68.80. Who is sitting over here that's responsible for the lower prices? Well, in this region here, there are what we call passive sellers, right? These are passive sellers that are responsible for the lower prices. So when you're coming into a key level, you need to understand this basic concept. Passive sellers drive price down. And so my execution came today or yesterday, right? My execution came at 60. So if you just take a look here, it came at 68.70, right? 68.70 was the main execution. So now when we go back to the charts, we want to kind of understand 68.70 was the main execution. So I'm looking for essentially this break and retest, right? So break, retest, and then 68.70 was the execution, right? So I was happy to have my kind of stop just above this long wick over here, right? This long wick over here was just where I was happy to have my stops. And we want to be targeting the recent low down here, right? That's a 1 to 1.5 risk reward, right? So in this pattern over here, what have we observed? We have observed a very, very simple break and retest. And so this is the three-step pattern I want traders to understand, right? This is what your chart should look like. We are looking for a break, we are looking for a retest, and then we want to go short, right? So we are trying to go short in this region over here. This is where we want to be going short the most, right? So we're seeing this retest to the downside before going short. So again, order flow shows us very particularly that this is the move itself playing out. And so we did have, again, lower prices, as we began to kind of melt beneath this zone. So if you're struggling with lower time frame execution, the main thing to kind of understand or take away is this chart here, right? These two charts next to each other. So this one, if we kind of zoom in, what was going on? This massive wick, very, very telling. You only need a few candles per day, and you only need a few few minutes, maybe 5, 10, 15 minutes of true order flow reading in order for you to understand what's going on. So think of this chart being superior or better than this chart you see to the left, right? So again, what we're seeing is this region over here, right? This big yellow box is the same as here. So what you're seeing realistically is a lot of market buy orders, right? Blue delta, we see a break to the downside. This here shows us that yes, there are more market buy orders and sell orders, right? But the market was unable to really reward those orders or fulfill those orders, right? That is the reason we had the break, and that is the reason we had this retest over here. So this retest corresponds to this area here. And that is the reason we had the shorts that the way we did.